Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zaleski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CVRRealty.com. Recorded weekly in greater downtown Miami, this 1-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the social media accounts of Peter Zaleski and Jenny Huertas.
Happy Monday, Miami. This is Miami Condo Mondays. It's a podcast where we discuss the latest trends going on in the South Florida condo market. What are we going to talk about today? We're going to talk about entering the 2025-2026 South Florida winter buying season. And more importantly, we're going to tell you what cap rates are out there. So if you're an investor and you're trying to gauge, is this a market I need to come into and spend my time looking at condos in between partying, in between going to events, and in between checking out and enjoying the beautiful weather, we have the lowdown for you. We're going to take a look at the overall condo market. We're going to use Greater Downtown Miami as the focus, as the cornerstone. And then we're also going to look at the vintage condo market. We'll be relying on Miami Beach. Miami Beach is an international destination. It's also a place where there's a ton of vintage condos, which are 30 years old or older. We got you for about an hour. Remember, every Monday at 4 o'clock Miami time, we're going to be talking Miami Condo Mondays. So that being said, let me go ahead and introduce my co-host, my partner, Jenny Huertas. Jenny is a broker owner of CVR Realty. Check out our website, cvrrealty.com. What's up, Jenny? How are you? Happy winter buying season.
Yes, happy Monday. It's a beautiful weather. I couldn't get over how beautiful the weather was this weekend.
You know, I didn't get to experience any of it. I have been grinding. Anybody who knows me knows in the summer I build, and in the winter I fasten that seatbelt and I hold on. Unfortunately, it's been a sprint, and I still haven't gotten over the finish line yet. I'm a little bit late on some things, but I'm trying to get everything all primed, all ready to go. Why? Because we're going to be doing 5 podcasts a week. We're going to be doing them every business day at 4 o'clock for roughly about an hour or so. So on Mondays, Jenny, this was the flagship. This is the flagship. This is the first podcast that we launched, Miami Condo Mondays. We did it back in May, right when we got into the summer buying season. I then followed suit. I added one on Fridays. I do it with a gentleman called Daniel Hernandez over at Compass Real Estate. We do something called Buy, Sell, Hold Miami, where we talk about some of the biggest business stories that occurred last week, and we decide whether we're a buy, a sell, or hold. Then I launched on Wednesdays the Peter Zaleski Show, which is basically an interview type of show, where I bring out somebody who might be, you might offer some services or offer an interesting tidbit for anybody who's interested in the real estate market, the condo market, and or the overall economy. This Thursday, Jenny, for the first time ever, we're launching the Condo Capitalism podcast. It's going to focus on distressed condos and real estate in the South Florida market. And then finally, probably in the middle of November, I'll be bringing out a condo statistics podcast, which is going to focus primarily as our cornerstone, being the Miami Condo Cliff Index. This is an index that we use. We update it weekly to try to give people a real-time perspective as to where the market's going. A lot of people will look at closed sales data. The problem with closed sales data is those sales might have closed 90 days ago, 60 days ago, 30 days ago. They may or may not reflect what's really going on in the market. And with our index, we're trying to track things weekly in anticipation. It's kind of foreshadow what the closed sales data might suggest. So on Tuesdays, we're going to be talking about data. But my first podcast is the Miami Condo Mondays, Jenny. So we're going to go hard at that. We're going to start off the week strong. And all throughout the rest of the week, I'll be hitting people with tons of information. So remember, 4 o'clock every workday, Monday through Friday, you can have all of my comments if you're so interested. And if you are a club member, you can actually watch it on demand after the fact. So what we do is with these live podcasts, you can watch it for free. You'll see it at miamicondo.club. You'll see it on social media sites. But then once it's actually recorded, then you have to see it on demand. In order to see the whole video on demand, You have to be a member of the Miami Condo Investing Club. The club is set up for DIYers, which are do-it-yourselfers, for realtors. Maybe some of the realtors out there, they're not getting a real good sense of what's going on in the marketplace. They don't know whether or not they should take on a listing and burn that $2,500 it's going to cost them probably to put a listing into the MLS and do all the videos, the drones, all that type of stuff, and then take on a property that's never going to sell. So maybe the Miami Condo Investing Club might be something for you. As part of being a club member, what you also get is once a month, I do an update. We call it the monthly virtual meeting. And there I tell you about what's happened over the course of the last month. And I also give you a roadmap as to what's going forward. And then finally, we also do meetups. Meetups are once a month where you got an opportunity to get together with other people who are club members who are interested in the condo market, have some drinks, talk shop, pitch your services, or just sort of share war stories. And then finally, if you're interested in a particular market as it relates to condos, I do tours. I'm doing tours. The weather's getting beautiful now, so we are going to be doing our walking tours as well as bus tours. Every Saturday goes from 10 to 1 o'clock or so. If you're walking, we walk about 4 miles at a moderate pace. We have rest stops along the way. If you're sitting in a bus, it's about 3 hours, and then we'll hit a sales center. You'll have an opportunity to get out, stretch your legs, use the restroom, and maybe hear a sales pitch if you're so interested. If you're not interested, you can simply ignore it. But the key really to the tours are, I give you a handout, a list of all the condo projects in a particular market that we are touring. And this way you can, A, walk away with a good understanding of what's in the marketplace. But B, I'm going to teach you how to analyze condo buildings. Because Jenny and I are big believers. If you're looking after or looking for a condo, the most important thing is to find a building. Once you've identified buildings that make sense, then you drill down and you get into the units that might actually work, rather than doing it the way most people do it, which is chase around trying to find a unit. And then once you actually get it under contract, you take a look at the condo declaration or the budget or anything else, and you decide it was all a waste of time. So we kind of approach things differently, and we give you straight talk, and we also give you plenty of things to think about, but we won't tell you what to think. Jenny, what do you say to that? Are we going to tell them what to think, or are we going to give them stuff to think about?
Okay, breathe.
Oh, I'm fine. I'm ready to rock and roll. This is winter.
I know.
I've been waiting 6 months for this.
I think you're just floating the zone with information that is not actually available anywhere else. And that's a great idea. And I think people love videos because it's easier to, not because of our faces, but more because of our content. And congratulations. I know you're working hard, and that's what we are here for.
That's exactly what we're here for. Jenny, you know what else we're here for? We're here to sort of bring transparency and clarity to a market. We're going to be talking about cap rates. And before you turn it off and say, oh my God, this sounds like accounting, this sounds like something I'm not interested in. No. We're going to make it real simple. We're going to make it real simple. We're going to take the fundamentals that everybody relies on, and we're going to boil them down and make it simple so it's something you can walk away with and you can understand and you can get a sense. Does this condo make sense or does it not? And if it doesn't make sense financially, it doesn't mean you can't buy it. It just means you either got to tinker with the pricing and or you got to understand that you're really a speculator and you're not an investor. Real easy way to differentiate an investor from a speculator. Investors get a return on their money. A speculator is gambling and betting that in the future that condo they buy is going to be worth more than what they're paying. And then along the way, if the rent's not covering their carry, they're simply coming out of pocket for that right to be able to have the unit and potentially sell it for more in the future. That's assuming it's a best case scenario.
Yes, exactly. Which work for a while. I mean, I'm going to be honest. Sometimes it works, but the market is going in a downward direction. So we'll see.
Yeah, we shall see. We will see. You know, Jenny, I remember way back when we first got the Condo Vulture thing going, and that was a predecessor to this. Launched it in 2006. Prior to that, I was a journalist, and one of the things I was doing is I was looking at the marketplace, and I was saying, you know, this is really kind of weird. Everything is all kind of general. There wasn't really structure to it. So we came up with something called Greater Downtown Miami. And it was based on something called the Miami Downtown Development Authority. Downtown Development Authority was a taxing district. It still is. It was put in place to try to generate some sort of development in the downtown Miami area. Why? Because everybody was avoiding it way back in the day. Many of these high-rise towers that you see today, they were all one-story and two-story buildings. And what was interesting back then is they would have the air conditioning compressors up on the roof of some of these industrial-type buildings. They would actually have to put bars on them because people would come and steal them and then try to sell them off for the metal. down on the Miami River by the airport. So that's what it was. Now you fast forward to where we are today, and everybody kind of knows Greater Downtown Miami. But we were the ones who actually put it on the map. That's why I own the URLs, Greater Downtown Miami. We were the first ones to do it. This is something that we saw, and we said, this doesn't really make sense. Let's try to quantify it. Let's try to understand what's exactly going on here, and then we can drill down and we can kind of figure it out and really start to understand it. So a lot of things, if you are new to market, a lot of the things that maybe you are playing with today and utilizing, some of that stuff, we're the ones who created it. And I'm not saying that in order to brag. I'm saying that because we're bringing out a new thing today. We brought out the index back in January 1st of 2025 when we launched this Miami Condo Clip Index, which we tracked 23 markets from an overall condo perspective, and an additional 23 markets from a vintage condo perspective. Vintage condos are those condos that are 30 years or older. These are the ones that are really under greater scrutiny as a result of the Surfside condo collapse back in June of 2021. Oh, and by the way, who came up with vintage? We came up with vintage. We're the ones that put that on the map. So we just constantly roll out things, and then the industry tends to adopt them and they run with them. So the one that they might be hearing about, Jenny, as we go forward, it's called a Miami Condo Investability Barometer.
That's a new one.
Yeah, what the hell is that? Well, what it is we're breaking it down. We're telling you real simple, this is worth investing in or potentially considering for investment. You should avoid it. This one, you should pound that table and drop everything and run in and get there. Now, we're not going to tell you individual units, but we're going to tell you how we're sort of gauging it. We're also going to tell you how we are coming up with our cap rates. Cap rates are pretty fundamental. It's pretty standard. Everybody knows what a cap rate is. And if you don't know what a cap rate is, it's not really that big of a deal. It's something that basically says, am I going to make money on this thing or am I going to lose my ass effectively? But we're going to kind of tinker with it and make it simpler so you can get in there. And this is not meant for underwriting. This is meant for back of the napkin stuff. So traditionally, the way I would recommend people do it, and this is kind of, this barometer we've come up with, it's kind of in response to Jenny, because I rely on something called a 1% rule. 1% rule says whatever the rent is, that should represent 1% of the value. $1,000 a month rent means the condo is worth $100,000. $10,000 a month rent means the condo is worth $1 million. Now, every time I say the 1% rule, what does Jenny say? Go ahead, Jenny, say it.
It doesn't work like that.
Exactly. It doesn't work like that. So we get a lot of pushback.
Not in this market. Not in this market anyway.
It doesn't work like that. Not in this market. We always hear that, which is fine. But now we're going to add another layer. We're going to try to corner all these people who say it doesn't work. We're going to put them in a box so they can actually understand what the real numbers are sort of throwing out. So this is another move towards going that way. And that's why we came up with this barometer. Remember, Miami Condo Investability Barometer. That's what we're calling it. Barometer is sort of that thing, it measures, like when the hurricanes are coming, they'll tell you different measurements and what the weather's like and stuff like that.
Yeah.
So, but barometers is the way we're going to do it. Think about almost like a thermometer. When you're feeling sick or something, you put it in there and you get a sense. So that's really where we're going to be coming out with today. And then from there, we're going to get into what's going on in the overall condo market. Now, the way I look at the market in Tri-County, South Florida, of Miami-Dade, Broward, Palm Beach County, I look at luxury pricing. And what's luxury? $1 million or more. We might have to revise that, but we've always gone to $1 million or more. That pricing is going to start south of 5th. South of 5th is a neighborhood, exclusive neighborhood that used to be real shitty. But then when South Beach came back, it became, because it was so shitty, nobody went in there. All of a sudden it had the dirt in order to allow some of these new massive rock star types of developments. So south of 5th in our book is where luxury condo pricing starts. It's on the barrier island of Miami Beach, right over the causeway, about a 5-mile trip over Biscayne Bay and the Intercoastal. You get over to Miami Beach. As soon as you get over to Miami Beach, if you're taking the MacArthur Causeway, you hang a right. It'll be that area. So that's where we believe, or I think, that luxury condo prices start and or peak. Now, as you go north from there, prices go down. Now, the flip side is, and keep in mind what luxury is. Luxury typically it's excessive space. They give you all kinds of amenities, all kinds of stuff that isn't necessarily standard, but it's luxury. Luxury means not a lot of units. High density is something where you shoehorn in all those units. You got 12, 14 units per floor. There's 70 stories and there's 200 parking spaces. So everything is like squeeze. And by the way, when I talk about that, I always talk about 0.5 dogs. And so look around and see how much green space you have. That's always a critical factor, at least from my perspective, when you talk about quality of life in some of these buildings. Now, so luxury is going to be south of 5th. Now, high density, I would say is going to be greater down to Miami. That's that area from the Julia Tuttle south of Rickenbacker Causeway. That'll be Biscayne Bay west to Interstate 95. That's going to be where all the developers come in there, put high density type of product. And again, high density product, we think pricing starts in greater down to Miami. And as you go north, prices go down. Why? Because the most desirable areas from an investor perspective, especially coming from out of town, it's going to be either the beach south of Fifth and or greater downtown Miami. So we did a sample of these two markets, and we're going to talk cap rates. And this should give you some perspective as going forward, what you can expect in other markets. Jenny, what do you think of that perspective? Of my off base, or my sort of right in line where what it should be? Because there's so many different, there's 6.1 million people. There's 3 counties. There's 100 municipalities. There's all kinds of condo products. So why not just hit a couple bellwethers? Barometer, bellwether. I sound like a meteorologist, but why not just hit some of these? And then it gives you kind of, talking points as you're going out there and you're evaluating things.
No, I think it's great because the size of our market, although it's not huge in land, it's huge in units. So we need parameters. You call it thermometer, barometer, indexes, whatever. I think it's great. Thank you for your hard work, because that gives to the public and to our job as professional realtors an easy way to explain to people, because it can become really overwhelming for many. Even for people that work in our industry, sometimes say, like, oh my God, it's just so many of them. It's just I can't catch up with all the new information, new towers, new concepts. So thank you. I think it's great for the industry from the beginning of Condo Vultures 20 years later. You are always innovating in the way you look at the market, and you definitely won those bragging rights.
And anybody out there, if you are interested in the club, honestly, this is the type of information I share with club members.
Yes.
So if you want to play the game on your own, you want to play the game on your own, DIY it or work with a realtor or something like that, you should know what you're getting into. And this is what we've been doing for, I've been here since 1993. Jenny's been here about the same amount of time. I've been writing about condos and real estate and finance and trade for 30 plus years or so. Jenny worked as a financier, and now she's had the brokerage CVR Realty, which is a sister company of Condo Vultures Realty. And by the way, if anybody's interested, CVR stands for Condo Vulture Resale Realty. So that was for the people who bought on the distress side during the Great Recession. And then when they turned around and they went to sell, Jenny was representing them on the way out. So she's seen the entire life cycle of booms and busts. Jenny, before we get into it, give me a vibe as to what are you feeling right now in terms of the state of the market? I ask you at the end of every podcast, and I'm not asking for that right now. I'm going to ask you later. But what's the vibe you're getting? You've been around long enough to see cycles and experience stuff. Does this remind you of any year or any period of time previously?
Yeah, it feels like 2007 to me, before we crash. I think because in 2006, I thought it was at the top on the price. Then 2007 stay even, it was like exactly what is happening right now. It's going down, but it's not going down enough to take some people to make that move and acquire. So that's what it reminds me. But however, the difference between then and now is that we have way too much information now. And when I'm saying too much information now, I'm not talking about your information. Information is to the point, is based on stats, is not marketing. We have way too much marketing and all these stats that you can, as a realtor as well, you can use to kind of shape a little bit of what you're trying to tell to your client about comparables and things like that. So I think the transparency that you can bring to the market is truly appreciated.
Well, and anybody's interested in looking for that push-pull, I'm going to be sitting on a panel with a bunch of developers in later this month in December, where we're going to be talking about they're all bullish, and believe it or not, I'm bullish as well. People might be shocked. I'm very bullish But I'm bullish because I think prices are coming down, and I think buyers are
Yeah.
suddenly get an opportunity. Now, on the sell side, I would be extremely bearish. But overall, going into this winter buying season, which again is going to go from November through April, I'm extremely bullish. And
Mm-hmm.
you're going to be hearing about how positive I am, probably to the point where it makes many of you sick. Uh, if you're trying to sell or if you own a unit because of what we're seeing from the numbers. A lot of what we talk about is it's numbers driven rather than emotions. It's not
Mm-hmm.
about the 1,000 people a day moving to Florida and the gateway to Latin America, which is a typical convention or visitor bureau propaganda that you hear. We're going to be talking about straight up numbers, and you can disagree with the numbers, or you could disagree with you can disagree with the conclusion, but you can't necessarily disagree with the numbers if you're
Right.
somebody who's sort of based on numbers. So that's the stuff we're going to be getting into, and it's important to flush this stuff out to give people an idea, because I'm a big believer, Jenny, with transparency, even in an up market or a down market, people are going to pull the trigger. They're going to go forward. They're simply going to adjust their pricing to make a
Right.
decision because they have the information. But when there's a lack of information, what do? They sit on the sidelines. They get paralysis by analysis, which is what we call going into summer. And that's exactly what summer was. A summer of paralysis by analysis, a summer of wait and see.
Yes, it was. It was. I'm very excited too for the future because we are having a lots of these newer product coming in the market around the same time. So this is opportunities for buyers that want to acquire something newer, where they didn't invest 5 years putting the money aside, and they might be able to grab some of those units at a lower price than the previous buyers. So I think that's what I'm getting excited about, because yes, vintage, there are a lot of opportunities, but you probably want to consider, if you can, obviously it depends on the budget, to acquire something that is newer and you don't have to worry so much about the special assessments and reserve.